Good morning, everybody. It's Friday, July 12th, 5:27 a.m. Central Time. Grain markets are a little bit lower this morning. Matt Bennett is here. Guys, let's start off with the USDA report, which will be out later this morning.
It sure will. It will be out at 11 Central Time this morning. The agency will update its new crop U.S. corn and soybean balance sheets to include data from the June Planted Acreage report, which included a sharp increase in corn acreage versus March intentions. USDA is unlikely to make adjustments to their U.S. corn and soybean yield projections. Traders will be on the lookout for changes to the global supply and demand situation. The report is likely to offer a mostly bearish tone compared to last month with regard to corn prices in particular.
The U.S. corn production number will undoubtedly be higher today because they're going to use a different set of acreage numbers. They're not using March intentions anymore. They're going to use the June 28th number. Matt, are they going to adjust the yield today? I don't think they will.
I can't imagine that they would, Joe. I mean, you've seen that happen a couple times, in the last several years. I believe 2019 and 2012 is the only 2 years that I can remember we saw that. It's just, I do
Those were downward
understand.
revisions.
Right. I do
There's not a, you
understand.
can't make a case for a downward revision right now.
I can't. I can't. I've had people tell me that they want to make a case for it, but of course, that's looking out your back window. If I looked out my back window, Joe, I'm afraid we'd have to go higher, but I do not expect the USDA to go higher this month either. So yeah, I believe that it's going to stay the same. It's just that you got to go up in acres 1.5 million. That's not going to help anything.
To stick with the production theme, we've had a ton of rain across a lot of the areas that really needed it in the central and eastern corn belt over the last week. This has undoubtedly added millions and millions and millions of bushels of production. USDA's most recent estimate for the national corn yield is 181. Could you make a case that that number's too low?
Yeah, I could. I mean, I don't know, Joe. You and I talked about this the other day. I mean, essentially, what you did was you took what I thought was the Eastern Corn Belt, who you had, as your kind of ace in the hole of maybe keeping the market propped up because you had stuff creeping in on the drought monitor. A lot of heat coming in July. So if you missed that storm coming up through here, obviously you were going to see significant stress, even though a lot of people are still going to probably pollinate okay, but then you get a widespread 2 and 3 inch rain across basically the majority of the central and eastern corn belt. Boy, you just kind of take that away, and so I guess my personal thought is that you could be looking at Eastern Corn Belt being more of a record type crop instead of dragging the yield lower. So yeah, I mean, I'm afraid in the long run, 181 could be maybe a little bit too low, but it's still a little early yet. Time will tell. If you have a really good grain fill period, I think that it is too low.
We have not had a corn yield that's above trend since 2021. In 2021, we were like at trend or just barely above trend. If there was a year to do it, this is probably it. The question, I guess, is now, okay, well, these big crops in the East, and I think they're going to be big crops in Illinois and Indiana, places like that, are they going to be enough to offset what was lost in, say, northern Iowa, southern Minnesota, parts of Wisconsin, these places that were just way too wet? I think that's going to be the question.
That's a big question, and I will say that some of those areas, it's a train wreck. I saw some of it in my driving here over the last couple of days, but well, I don't know. To me, if you've got, in all honesty, the I states in totality, okay, Iowa, relatively speaking, would probably struggle the most out of those three, but I think Illinois and Indiana will probably post all-time record state yields. Is my guess, at this point. Clearly, it's still early, but I do think that the recipe is there that will get accomplished. And so you've got to think that the I states in totality, with two of them producing an all-time record yield, are probably going to collectively produce an all-time record yield. So I don't know, Joe. It's going to be really hard with those three states and the punch that they pack, that you're going to be able to drag this thing as low as maybe what you need to.
Okay, that's the production side. As far as the balance sheets are concerned, we should see slightly larger old crop carryout estimates because of those June 1st stocks numbers. USDA is probably going to come up with its new crop corn demand number, whether that's right or wrong, just because that's how they do things. Outside of the production stuff, anything that you're looking for today specifically, whether it's South America, U.S. demand, I mean, any big changes?
I mean, I guess the only thing I would be wondering is clearly the USDA has lagged everyone in South America as far as production cuts. Now, you get people down in South America raising the Brazilian corn crop now, but that's just closer to the USDA. So, does the USDA move just a little bit lower on corn and bean total production? I don't know. They sure have been hesitant to do so, but I think that that's a possibility. I don't think it'd be anything more than a million, or I don't think it'd be anything over a million tons on really any count. But I do think that some people are kind of looking for that to potentially happen, just due to the fact that they're so far away, from your folks down there.
It's difficult for me to envision this being a friendly or bullish report. I hope I'm wrong about that. Crazier things have happened.
I don't see it, Joe. I mean, I don't know. I did a meeting last night, not far from where I'm at in Des Moines here this morning, and to be honest with you, I didn't even enjoy the tone that I had, because I'm like, right now there's a whole lot going against us.
Yeah.
You've got a huge carryout that's hung over our heads, to where any sort of spring rally or weather market rally, weather volatility hadn't been in the market. Why hasn't it? Because you've got this carry, you've got all these stocks. And so the trade's been very hesitant to step in and get too excited, to be able to get any story to develop. And then all of a sudden, you're looking at over 90 million acres planted, with a 180 plus yield. And I've actually talked about this the last couple winters. What is your plan for whenever we do have 180 bushel corn? Because you got to have a plan for that. And so unfortunately, this has been a hard year to market due to the fact that costs were so high. A lot of folks have never had much of a chance to market at a profitable level. So having a bearish July report's not what we'd like to see. I just That's the reality. Unfortunately, I just don't see an avenue around that.
We're in a tough spot. Let's jump to Ukraine.
So, Ukraine detained a foreign cargo ship on the Danube River and arrested its captain on Thursday. The vessel was believed to be carrying Ukrainian grain from Russian-occupied Crimea. Since 2022, Ukraine has accused Russia of stealing and destroying its grain. Ship seizures, however, have been minimal. There is concern about potential Russian retaliation during Ukraine's peak grain export season due to the detainment of this ship. Wheat futures rallied sharply following the news.
This was good for a one-day rally. The way it looks right now, could it be any more than that?
I doubt it, unless you see some sort of an escalation. I mean, in all honesty, some sort of a major escalation, I guess, could support wheat and corn potentially. But Joe, I mean, we talked about this months ago. That essentially, whenever some of these stories first started rolling in, they packed a big punch. And then of course, as time went on, you had to throw more and more and more ammo at the market to try to kind of get it to raise its eyebrow. And now, like you said, maybe a one day kind of flash in the pan. You're going to need some serious situations to develop if you really want to see something happen out of the Black Sea region. So, yeah, I don't really envision a whole lot there, and unless something crazy happens.
Yeah, you step back, and this story hasn't been overall bullish for 2 years. I mean, the wheat market's been trending lower for 2 consecutive years now, for the most part.
Yep.
USDA released its weekly drought monitor data yesterday. Temperatures across the Corn Belt were mostly below average last week, and a large portion of the area received rainfall. Drought conditions improved in southwest Missouri, southern Illinois, southern Indiana, and across portions of Iowa. Conditions worsened in western Illinois and northeast Missouri. Like the Corn Belt, the majority of the High Plains received precipitation last week with below normal temperatures. Southeast Nebraska and the western portion of Kansas saw improvements in drought conditions. When we look at the percentage of U.S. areas experiencing drought, corn country 7%, soybeans 8%, winter wheat 20%, spring wheat 7%, and cattle country 14%.
To go back to this map, I'm not necessarily sure that this drought monitor is totally reflecting the rains from this week. A lot of them, it says July 9th on it. That's when it's supposed to be accurate as of. Some of the rains it had hit by that time. I think most of them. I don't know if the rains are totally reflected here, but I would venture to say that you're going to see this map in itself improve again next week.
Right. And so, Joe, if you were going to have a trend line yield, this is the type of yield, drought map that you would want to see.
Yeah.
And so I know a lot of people are probably raising their eyebrows at us and saying, good Lord, guys, can you freaking throw something good at us? And I understand the frustration. I do. But if you look at the drought monitor, there's not a problem anywhere. Okay. Spring went, not perfectly, but good enough. We were not excessively behind pace. And so, yeah, I don't know. I mean, we were the driest area, as far as the drought monitor was concerned, coming into this last week, and then, like I said, I mean, we ended up with anywhere from, 2.5 to 4 inches of rain. There was a little bit of water standing here and there on my drive up as I first got started, which would have been the driest areas, and so that tells me that, boy, we soak in every little bit that you could possibly soak in. I mean, it wasn't a fast rain, and we got every bit of good that we could have gotten out of it. So I expect this drought monitor to look a little bit different again next week.
Given today's modern corn genetics, you'd probably rather be in one of those yellow areas on the drought monitor than in one of these places in, say, southern Minnesota, where you've been excessively wet. Your yield potential, if you're in one of those yellow areas, is probably a little bit better. And that's the thing that a drought monitor is not going to show, is excessive moisture. And I think if there's a moisture problem this year, it's excessive moisture in some of these areas and not lack of moisture necessarily.
U.S. corn export sales increased last week. Net corn sales were reported at 21 million bushels. The print was up 51% from the previous week, but down 13% from the prior 4-week average. Colombia was the largest corn buyer for the week. Net soybean sales were soft at 8 million bushels. The print was down 9% from the previous week and down 40% from the prior 4-week average. The Netherlands were the largest buyer for the week. Net wheat sales of 9 million bushels for the 24-25 marketing year fell below pre-report expectations. Thailand was the largest wheat buyer for the week.
We have major demand problems, especially as it relates to soybeans. We had our export sales charts in the email this morning, and current marketing year soybean export sales accumulated commitments are the worst of the last 10 years. New crop commitments of soybeans are the worst in 20 years. And we're crushing more soybeans, but it's not enough to offset the losses here in these big crops. It's a major problem.
Right. I guess one thing that you just said reminded me, I asked to borrow a slide of yours 3 months ago. And that was, basically that we were continuing to go towards more crush and less exports. I guess the problem, Joe, as you just kind of referenced, is that whenever your exports are as pathetic as what ours has been, crush has to increase dramatically. It already has. It just has to increase a lot more. I mean, if you're going to be able to get demand propped up. And so, it's one thing I talked about a little bit last night is that, when you look at this balance sheet on new crop, again, I mean, it's not overly bullish, but the USDA is way too high on U.S. Soybean exports. The data would suggest that they're not even going to come close, unless something drastic happens. And so it's super concerning. By all means, I think that if you're 5 years out from here and our crush industry is expanded, like some had suggested, 700-800 million bushels, that's a really good thing. But we need at least that, and we need that before too long. So crush is going to have to pick up the pace significantly. So we're going to have to see major support for this renewable fuels initiative.
To see a big increase in new crop soybean export sales or business out of the U.S., you would almost certainly need to see a weather problem in Brazil, and probably a fairly substantial one. USDA's got new crop Brazilian soybean production pegged at 169 million, up from what's going to be 150, 153 this year. So they're looking at a massive crop. If you have a weather issue, maybe that's how we do it. Even corn export sales for new crop are not good. We're like the 4th worst of the last 10 years, but very close to the bottom of the barrel here. So, I mean, you could talk about the big yields, and maybe the yields aren't as big as some of the numbers we're talking about, but if we don't have demand come into the market sometime soon, that's just not a good sign.
Absolutely.
Consumer prices declined for the first time in 4 years last month. The CPI fell 0.1% in June compared to the prior month, lower than the anticipated 0.1% increase. The last time inflation declined on a monthly basis was back in May of 2020. On an annual basis, inflation rose 3% in June, beating the expected 3.1% gain. This was the slowest annual inflation increase since March of 2021. The markets are now pricing in an 89% chance that the Fed will begin cutting rates in September, up from a 75% chance earlier this week.
I've got a few charts here. So CPI has not fallen below 3% on an annualized basis since March of 2021. So the Fed had stated that its target was 2%, and now it seems like maybe the real target is closer to 3% in all likelihood. So we're still not exactly where they need to be. The actual index itself is still at record highs. This is another record high in terms of the actual index. What does this basket of goods and services actually cost? As of this morning, it was a 93% probability of a September rate cut. You look at the items, what's up, what's down. Insurance is crazy. I don't know if you guys have looked at your insurance quotes. It's up sharply. Some things are down, used cars and trucks, airfare, gasoline, but 3% overall. Matt, if you were like a grain market bull, and I don't know if there's any left, but if you were a grain market bull, one of your stories perhaps was that you're going to see a return to inflation and that like big funds are going to want to own commodities again as a result of inflation. It seems like you can throw that story out the window for now.
That's a pretty tough story to look at. When you
Yeah.
look at, I always look at, like, for instance, what the USDA is forecasting for your average cash prices, basically for that basket of goods they put on there. It's just the price sheet, I guess, that they throw out there. And, essentially every single thing other than live cattle and turkeys are projected to be lower, and most of them decidedly lower. And if you look over a 2-year window, boy, the drop has been, not pleasant, to say the least. And so, yeah, I think that an inflationary type move, that ship has sailed for the time being. And I just I don't envision that something like that even could occur given the environment that we're in. So, yeah, I just don't think that's going to happen.
Yeah, not right now. I mean, I guess maybe if the Fed starts to ease too soon, you could get back into an inflationary deal. But this inflation was weird. It was all a result of COVID and the money printing and easy money policies. And I don't know if we're headed back toward that anytime soon. What did cattle do yesterday?
They were finally able to find some solid ground after a rough week. Feeders were up 45 cents to $1.80 higher. Live cattle were unchanged to 47 cents higher. Box beef prices continue to erode. Yesterday, choice ended the day at 324.05. That was down $1.61, and select ended the day at 303.94. That was down 37 cents.
Matthew, cattle market thoughts?
Yeah, I mean, I don't really think we're going to do anything major right in here. It sure seems to me like this week was a little disappointing, I guess, for me, especially when I looked at the feeder market. But overall, the cash market on both feeders and fats is still, the reality of the situation is that demand is still extremely strong. I talked to guys last night in Northwest Iowa that are wondering about buying $3 feeders, and they said, well, if corn keeps getting cheaper, they can make those work. But I tell you, you're playing a pretty risky game there.
All right, guys, reports out at 11 today. Everybody have a nice weekend. Matt, thank you. Guys, we'll talk to you Monday.